The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, it's a bit of a tough day in the wheat market on Tuesday with quartered soybeans chopping around unchanged, while the cattle futures had a pretty volatile day all in all and did finish with some moderate losses on the session. Stock market had a good day, crude oil down a little bit, an interesting trade coming out of the 3-day holiday weekend. Joining us for market analysis, Corey Bratlin with agmarket.net is here. Corey, it's good to talk with you again. Hope you had a wonderful holiday weekend, Corey.
Hey, Jesse, great to be here. Yeah, we did. Had a nice weekend. Weather was pretty good. A little cloudy up here in South Dakota. A little bit on the cool side, but we're starting to turn around and warm up and dry out a little bit up here finally. So.
Well, that's good to hear. Good to hear. And one has to wonder what some of those condition ratings will look like when those are released after the market closed Tuesday and how that affects Wednesday trade. It felt like that corn market kind of chopping around, waiting for some of those numbers from USDA, Corey.
Yeah, we saw, the corn market under a little pressure here today. I think it was more of a function of wheat being down. We are looking for wheat ratings to be steady here this week, maybe up just a touch. We had some pretty big widespread rains come across, western Nebraska through Kansas, a lot of Kansas and into Oklahoma, which definitely going to benefit that crop. But, corn, get back to corn here. Yeah, we are going to get our first crop condition ratings for the year. Now, trade is looking for around this 73, 74% rated good to excellent, which this is kind of where we start out year in and year out. It's where we started out last year at this time, around 75, I believe it was, or maybe it was 74. But we like to start out real strong. Now, my one question I'm kind of anxious to see here, Jesse, is with all the wet weather that we've had here in the Dakotas, and we really been blessed by getting that moisture, but we have very cool temps and strong winds with that. Our corn crop looks ugly right now because it's almost like it was wind chilled frosted. If it is such a thing, it just looks brown. We got to get the sun out and warm up. But everybody's kind of telling me, their agronomists are telling that we just take a little time. We just need a little heat. So I'd be anxious to see if by chance the Dakotas, Minnesota, and even kind of western Iowa, if we see ratings could possibly come a little bit lighter than what the trade might be expected based on that right there.
And that's a good point. And that's something we talked with Eric Snodgrass about on the weather side, is that we need some heat on some of this crop to get it to pop out of the ground. We're kind of struggling in many areas, especially up in your neck of the woods. Well, and I think about this too. Last week in the markets on the grain side overall was a pretty solid week across the board. But, one has to wonder here going into the end of the month and these ratings and more, could we chop a little sideways here, particularly in the row crops, Corey?
I think you do. We had the nice little bounce back. We were a little bit too cheap. We had the nice rally back in here. Weather was a little adverse last week. Now, what I like, one of my rule of thumbs is always like to be careful with 3-day weekends. We have 3 days of no market. A lot of things can happen. And I think what we're starting to see now is some of the extended weather forecasts do look for really good for much of the Corn Belt for crop emergence. We still have our problem areas of the deep south. Unfortunately, for those who are listening down there, I hate to be a bearer of bad news, but it sure does look like there's more moisture coming for Arkansas, Louisiana, over into Mississippi, western Kentucky, and that area. In the Dakotas up here, we're in the western Corn Belt, upper Midwest. We're going to dry out a little bit and warm up. So I think by first week of June, Jesse, we're going to be off to a pretty darn good start for the entire Corn Belt.
That wheat complex, we should talk about that a little bit more. I mean, we were up some 30, 40 cents on the weekly closes, I believe, last week. And then, here we are struggling on Tuesday. I know the dollar higher as well. Have to think that's adding into some of the headwind here in this wheat complex, Corey. What do you think?
Yeah, it is. One thing I noticed today was our export inspections that we get out each Monday. Well, today is Tuesday, being the first day of the week. We're strong again on wheat. So obviously, yeah, the dollar index trading below 100. Yep, it's up today. but we do have some of the cheapest wheat in the world. Now, I mean, say earlier when I talked, I said we had some big rain sweep across, the dry portions of western Nebraska. And I heard like around 70-80% of Kansas got anywhere from a 3/4 of an inch to maybe a couple inches of rain. So is the stage that crop is in, that's going to be very, very beneficial for it. So it just seems like, last week I felt really good that, hey, we put a significant low in. We've rallied this wheat back, 40, 50 cents. Now we're going to pull back, and it's never just straight up. I think, if we can hold in here, like I was kind of watching this Kansas City July wheat around this 525 level. If we can hold that area, I think it almost sets up an inverted head and shoulders bottom on the charts, and this could just be and we could head sideways for a little bit, much like the corn and the soybeans.
If you look at these charts for corn, soybeans, wheat, I'll ask you first, what's one that you maybe are excited about, or at least you feel has some bullish momentum? I'll let you take your pick, and then we'll go the opposite route and talk bearishness. What stands out to you?
I was just looking before I hopped on here today, and the soybean market, I think one has to be impressed with how soybeans are acting in here. We continue to trade above the majority of our major moving averages, the 100-day, the 200-day, the 20-day moving average. We continue to hang above there. Yeah, we haven't been able to take out our recent highs of 1082 on the July contract or 1065 on the November contracts, but if when you look at global ending stocks, we look at the trade wars that we have with China, in that we are just flat out not selling any soybeans to China right now. I think one's got to be a little bit optimistic on these soybeans, because we here domestically, if we have a hiccup in our production this year, carryout stocks are going to get dangerously tight here in the U.S. And 52.5 bushels. It's attainable. We've done it, but we gotta have really, really good weather. So I think the funds are still holding a very small long position on the beans yet, where they're short wheat and corn. So overall, I mean, I like the optimism here possibly in the soybeans. I think the market knows that, and it's just a little bit premature to maybe sell this market off this early in the season.
On the flip side, what stands out to you as a bearish factor or a bearish chart that you're watching on the grain side, Corey?
The corn market, I'm a little disappointed in. We continue to struggle with really getting much of a rally. I mean, it's early in the season. Yeah, we have the 95.3 million acres. If weather is fine, we're going to grow a large crop. With that, though, we are still, a couple bushel an acre off of our trend line yield. If we hold the 95.3 million acres, if we drop to even a 179 yield, similar to what we had last year, all of a sudden carryout starts to drop, and we start getting down to 1.8 billion bushel carryout. The other thing, what I keep looking at, is the global ending stocks. Global ending stocks, even with the thought of South America having a big crop, U.S. projected to have a big crop, our carryout stocks are dropping to 277 million metric ton. That's the tightest stocks that we've seen in the world on corn since 2013. So I just kind of wonder here, are the funds pressing the short side maybe just a little bit too early, too soon? But it's hard to argue with them when the corn is planted. It's May 27th. We're going to be talking close to 90% planted here today, and I would say we're about a week, 10 days away from seeing some improvement in our corn emergence, and off to a good start.
Well, and it's something too that these markets, seasonality in the grains, this is kind of that time window, right, Corey, where we can tend to get some rallies really from it's like Mother's Day to Father's Day, or even Memorial Day to the 4th of July. So seasonality is something we have to keep an eye on too, right?
Yeah, you do. I mean, typically when we're planting the crop, which we are, is when you should be selling the crop. So, seasonality speaking, as we do have a tendency to put our highs in either May or June on the new crop corn contracts.
We're talking with Corey Bratland from agmarket.net here today on Market Talk. Corey, let's go to livestock cattle. What a wild day there Tuesday. That cattle on feed report was, I'd call it relatively neutral. And then We come into Tuesday's trade. We start a little higher, huge sell off. We got a good chunk of it back, but what exactly was going on in that cattle trade on Tuesday, Corey?
Yeah, the cattle and feed report, like you said, it was kind of a very neutral report. So I think there's something there for the bulls, there's something there for the bears in the market. And we started out, 20, 30 cents higher, moved a little lower. And I thought, hey, we're just going to see a sideways trade. But, then I'm not even going to repeat the rumor, but it was exactly that. It was a false rumor that hit the cattle market. Nothing's confirmed. So down they went. I mean, we saw live cattle down, well over $3. We saw feeder cattle over $6 a hundredweight down, and then they found out that it was just that it was a false rumor. We saw the market kind of come back, and so overall, I think it just shows you that the skittishness of the market, it can be with these headlines. So if we do see something it is confirmed coming out, and that how much of a downward momentum we could have. And with that said, I mean, you got the funds are carrying near record long positions in both live cattle and feeder cattle, so it does make a lot of sense why they're going to be sensitive to some of these headlines.
Well, and that's just it. We're at such lofty price levels here on the future side that, any sort of negativity here, to your point, I mean, these markets, traders probably are a little skittish in here, waiting to see if the bottom is going to fall out here. They're, wanting to kind of jump in and be ready to take action if it looks like that's what's happening here, Corey.
Yep. And when we're dealing with these high prices, just a normal 5-10% correction is big. I mean, you can see a $10-$20 correction in the live cattle, and that's just a normal percentage correction that we normally see. But it's just when you're dealing with high numbers, those are big corrections.
How about the cash cattle trade too? I know last week that was still fairly robust, steady to higher, pretty wide range in the northern plains. I mean, you take a look at cash though, that continues to run at run higher than futures. I mean, what stands out to you with the cash cattle market right now, Corey?
Cash was, for the most part higher last week. I haven't heard much trade, or any calls for this week. I would think kind of steady, maybe just a touch lower potentially just after today's action, but we'll see. But the box beef has been on a tear here lately too. That finally broke above the $350 level here, so that's pretty positive. So I think in the big deal, and that's in the big picture, and that's going to continue to support this front month. And that's why I say you saw June cattle. They closed about $3 off their low today, only down around 60-70 cents here on the day. So we had a nice big comeback rebound in that. But I think it is. I'm kind of wondering if they're looking for a little steady, maybe just kind of steady here cash trade, because of that box beef is still up there pretty good levels.
Any notes in the hog market as well, real quick? It felt like we maybe finally found some technical footing on that side of the protein complex on Tuesday.
Yeah, we are hearing that the numbers are starting to drop off a little bit here. So I'm hearing some rumblings that the Packers were looking for some hogs over the weekend. Looking here now, we got a short week. They're still kind of scrambling, looking for that. So we're kind of wondering if we're not starting to hit this hole where we might saw these numbers kind of fall off with PRRS, and also with all the sow liquidation that we've seen over the last several months, just due to the profitability. But hogs look good in my eyes on the charts and stuff, and then especially when you compare what the price of it in the retail store. I got to think that if people are starting to pinch a few pennies here and there, which I think sooner or later that's going to happen, pork is a very viable substitute here for the beef.
Corey, good thoughts as always as we wrap it up here today. Anything final you would mention or reiterate to folks as you're looking across the trade this week?
Yeah, just seasonality. We should be looking for some type of a bump in here, I think, on these new crop grains. Take advantage of them. At least get some floors under place. I know, especially on soybeans, we're not in very profitable positions for most guys. But it doesn't mean that we can't continue. We can't push lower in the big picture. So I mean, it's all about risk management, and that's what we're here for, to help. So reach on out to one of us, and we'd be happy to visit with you on your situation.
And Corey, they could do that easily via the website, find phone numbers there. A lot of ways to get in touch, isn't there?
Yeah, head on over to our website, which is just agmarket.net, or else, our toll-free number, which can access to all of us, is 844-424-6758.
Agmarket.net. Again, for more, Corey Bratlin, agmarket.net. Always good to hear from you. Thanks for joining us. Have a great week. We'll talk to you again soon.
Sounds good. Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.